My next guest is Paul Musson, author of Capital Fence, Why Some Benefit at Your Expense. With years of experience in the financial world, Paul breaks down the complex economic forces in a way that's easy to understand and hard to ignore. So if you've ever really wanted to know what's really driving inflation, interest rates, or government spending, Paul is the guy to break it down. Hi, Paul. How are you?
Very good, Deville. How are you?
Good. Thank you so much for joining us. So can you tell us a little bit about why did you decide to write this book, Capital Fence, Why Some Benefit at Your Expense?
Well, being a professional investor for about 30 years, I was sort of in the trenches witnessing what was going on and how central banks were artificially driving asset prices higher, stocks, houses, because they thought it was good for the economy. It's not good for the economy. They think that it was well intended. I don't believe that they intended to enrich the top 1% at the expense of everybody else, but it was the outcome, and it was predictable. And the reason is when you, for instance, if you make, I know you're in the housing market, you're a landlord, and there's absolutely nothing wrong with making money in housing as a landlord.
Right.
But there's a lot wrong for my generation. I'm 63, making money on my home because I did nothing to deserve it. Now, none of us have done anything wrong. As boomers, we played by the rules, but we were just lucky enough to buy our homes before the central bank policy of a fake wealth effect, if you will, sort of ramped up. So when you think about it, an economy, for it to function properly, you should only be benefiting to the extent that you're benefiting somebody else. So whatever material wealth you have, it should be a reflection of the capital that you have created throughout your career and then exchange with other people for the capital that they have created. And we do it through the medium of exchange called money. But if I make money on my home, so I live in Mississauga, my wife and I. We bought our house in 2001. If we sold it today, we'd get 4 times, at least, what we paid for it. What was our contribution to society to make 4 times on our house? 0.
You know,
right?
It's an interesting way of looking at it, but I guess I also think that most of us don't get pensions and we don't have, there's no safety net for us without pensions. And so in order to fund our retirement, we need something. So a lot of people like yourself, a lot of people like myself as well too, the increased value of your home, you're going to be using that to help fund your expenses during the retirement because you know that the government's not going to be able to pay for everything. Is that such a bad thing?
Well, it is if it comes at the expense of the next generation. If it didn't come at the expense of anybody, then I would say, yes, that would be great. But policymakers have convinced all of us about this fairy tale, something for nothing economic doctrine where you can take out of the system more than you put in, and it doesn't come at the expense of anybody else. I wish that were true, but it's just not. And and so, our house, for instance, 4 times, what we paid for it. It's not because it's 4 times more productive. Our house is not producing 4 times as many widgets. It hasn't grown 4 times in size. And there's no net wealth creation in society when a young couple or a newcomer pays 4 times what we paid for it. When you look down on society, there's a redistribution of wealth. And that's from the young couple's bank account into our bank account. There was no net creation of capital in society. And this is the problem. And it also happens in stock markets. So there's nothing wrong with a wealth effect in stock markets when stock markets are rising because companies are putting capital to productive use. So they're creating capital, increasing their profitability, hiring more people are buying their products. That's real wealth creation. And so stock markets rise to reflect what's going on in the economy. But when central banks take interest rates down to 0 or do start printing money, quantitative easing, in order to explicitly drive stock prices higher, there is no more capital in society. All that's happening is they're they're harming the productive capacity of the economy by distorting interest rates and printing trillions of dollars. So the economy becomes less well off. You end up with more debt. You end up with more wealth disparity. And then you have more people who are struggling just to make ends meet. So as I said, it wasn't the intention. I don't think it was it's a conspiracy. It might be a conspiracy. I don't think it is. But it was just good intentions gone wrong.
But so, okay, let's go back to the housing thing for a second. So let's say, for example, you paid $400,000 for your house back in 2001. Yeah. Let's say the value of that house now, instead of it being, you said 4 times its worth, let's say the value of that house now was, let's say, $500,000. To your point about, not having housing escalate so high. So let's say, for example, the value of your house is now only $500,000. And the same thing holds for, all of the GTA, in that our houses really haven't increased that much in value. So it would mean we don't move from our houses. And so nobody else is going to be able to get a house simply because, I hear what you're saying about the fact that it's so expensive, and maybe I'm not making my point well enough, but then the supply of the houses is still an issue, in that not having enough supply, whether these houses cost $400,000 or $500,000. I get that they're more affordable at $500,000, but if there aren't enough houses for people to buy at $500,000, that's essentially why the prices do keep going higher and higher, because at some point there needs to be, because we don't have unlimited supply of those houses, as much as I know that we, wish that we did. So how does that factor into your thinking?
Well, supply is definitely an issue. And, it was primarily central banks that started all this with the fallacious wealth effect doctrine. But then, the governments joined, it was Team Canada, right? Everybody jumped on the bandwagon. So our government increased immigration to really unsustainable levels, levels that our infrastructure could not handle. Mm-hmm. And then municipalities, as you know, jacked up development costs to the extent that in parts of Toronto or Vancouver, it's almost a third of the cost to build a new home is paying the government all these fees and taxes. And so all these things, and then lack of supply, making it difficult to build more houses. All these things conspired to create this housing affordability crisis. And, right now, the average home price to income in Canada is about 12 times. And for years, it ranged between 6 and 8 times. And for years, the housing market worked fine. We were all able to get along without seeing our house appreciate significantly faster than the general inflation rate. So it worked for a long time. But it's not working now. And there has to be change. I don't see any way. Everybody wants to have their cake and eat it too.
Of course.
I'd love for my house to not go down in value, but if it doesn't, then the next generation is not going to be able to afford the kind of lifestyle that I've had, despite the fact that they're better educated, work just as hard as I do, just as smart, probably smarter. But why can't they have the life that I had when they played by the rules as well?
So what would you, and I've got about a minute left, what would you suggest that our leaders should do to fix this problem?
Well, to your point, which is a very good one, supply. So encourage building. And I listened to your show yesterday. The guest said, if supply goes up, then the prices of all homes will come down, because you can't have like hot water on one side of the bathtub and cold on the other side, right?
Yeah, it was good.
And so that was a good analogy. Stop distorting interest rates lower than the natural rate, which is another subject. But that's what the Bank of Canada is doing right now. We're far below the U.S. rate because they're trying to support the housing and real estate market. So I guess interest rates and have government stop backstopping asset prices.
Right. Wow. Okay. Well, that's good information. Yeah, something to definitely think about. Where can people buy your book, and is it available on Audible as well?
So it's not on Audible. It's been released in the UK. but it will only be released in North America on July 1st. So you can pre-order it on Indigo or Amazon or any sort of your favorite online book site.
Beautiful. Awesome. Paul, thank you so much for joining us this morning. It's been great chatting with you and learning your perspective on this book. Thanks again.
Well, thanks for having me, Deval.
Thanks
Bye-bye.
a lot. That was Paul Musson, author of Capital Offense, Why Some Benefit at Your Expense. Sounds like a very interesting read for sure. You can go online to Indigo Books and order your copy. It'll be available July the 1st.